Hello, everyone. Geoffrey Nance here. It is that time of the week again. It's Tip Tuesday. Today's tip is going to be fairly short, really. It's a simple concept, but an important one. And I think it's a step that a lot of people miss. So, if you've attended our step one, which is our foundational seminar, we kind of show you how the market works and introduce you to the concept of charting and understand pattern movement over time and the benefits of buying and selling versus just simply buying and holding. Then you get excited because we have multiple examples there of you being able to kind of see what you can do when you apply this correctly and you invest, and if you add to your money over time, and what you can do by reinvesting that money into certain trades. So it gets exciting. And then most people, they kind of see that and they're like, let's go. They're so excited. I just want to go full speed ahead. And that's great. And that's what we want, right? We do want that. We want that sense of excitement. But one of the things that you'll hear us say is that anytime you learn a new concept, so whether you're a newer student or you're just learning a new strategy, because we have a bunch of advanced strategies that we teach at different times of the year to smaller groups of people. If you learn that new strategy, what we tell you is, look, you need to go through and you need to paper trade that. Well, we've been talking about paper trading. You've got historical paper trading. I think there's actually great value in going back into the past where you don't know what's going to happen, but looking at a trade and then day by day kind of making your decision based off of what you saw at that particular time, and then moving forward, making a decision off of what you're seeing that day. I think there's great value in that. And then, of course, you have the live paper trading, which now just simply means that, rather than just looking back at the past, you're actually in the present. So you enter a trade today. Now you got to wait till tomorrow to see what it's going to do. So you can't just kind of go through and do a bunch of. One of the things I like about the historical paper trading is that you could actually do quite a few in a relatively short amount of time. Whereas obviously if you're live paper trading, now you need to be keeping up with these. And if there's any real value there, you need to be trading them, on a daily basis, or however you're going to trade them in real life in order to gain the value from it. So what's the next step after you paper traded? Well, it's small money trading. And most people aren't really excited about this step, and they tend to skip it or do it once and then be like, all right, that's good, I'm done. But I want to talk a little bit about the value of small money trading and why this is a good idea anytime you're learning a new strategy or trying to implement some new skill, particularly when it comes to the arena of trading. Just like anything you do in life, most people, if they have the knowledge and the skill sets and they improve upon those, you get better over time. So let's just say you're a gymnast. I've got a couple of daughters that are gymnasts. There are certain things they can do now that they were not able to do a few years ago. And there's still some skill sets they have not learned yet, which they will learn over time. But they build on that foundation that they already have. So you ought to be getting better over time, but initially you're not going to be as good as you should be. And so whether that's gymnastics or it's learning a sport, could be, basketball, football, whatever, ideally you should be improving over time. Well, that same thing applies to trading, just like it would a musical instrument or really any skill set, that you ought to improve over time. So if you're going to make mistakes, all right, when are you most likely to make those mistakes? Well, when you're starting out, when you're just learning. Okay. So if you're learning a new strategy, implementing a new strategy, what we want you to do is consider small money trading. One of our teachers, Ross, says it this way, that initially you are trading to learn before you are trading to earn. And I think that's a terrific way of looking at it. Initially, I am trading to learn, and then I can trade to earn. But if you get those backwards, I think it can have some consequences that you don't really desire to have. Think of it this way. So if you end up having some expenses and you're doing something, you think you're applying the strategy correctly, but maybe you are, maybe you aren't, but you're just missing something most likely. But you still see your account, and that account is going ticking down the wrong direction. Well, that's not what we want to see, right? We didn't teach you those strategies so you could go out and lose money. So obviously something is missing there, whether it's application, understanding, potentially both, but there's something missing there. So we end up digging a hole. And I've asked people this, look, if I've got a hole in my backyard because I decided I wanted to put a pool in back there, and then I let my, so my dogs have dug a couple of holes here and there. And I said, all right, listen, here's the deal. All right, I need you to go fill in a hole. Which one do you want to fill in? Well, everybody is going to say, well, why don't you give me the smaller hole? I'll fill that one in because I don't really want to fill in that massive hole that you dug for a pool. Well, all right, so now let's apply that to your trading. If you're learning a new skill set or a new strategy and you feel like, hey, I'm most likely to make those mistakes or have some expenses that maybe I'm unaware of why they're happening, you're going to have expenses no matter how educated you are, no matter how experienced you are, you're going to have expenses. So we're not saying you're going to avoid expenses, but what we are saying is that early on, you're going to tend to make more of those without really knowing the reason why. Like some of you guys have expenses, and if you're being honest, it's like, yeah, because I was being stubborn, I was being greedy, whatever. But you kind of know why. You're like, oh, I messed it up, or I didn't, get out because the whole market turned, and then I was still in this trade, and I decided I wanted to lose more money for some crazy reason. So when you're learning a new skill set, it's important that we understand, listen, if I want to make tens of thousands or hundreds of thousands of dollars or whatever, millions, whatever, okay, I first have to prove that I can make $100, because if you can't make $100 a month using that particular strategy, what would make you think that by purchasing more options or more stock that you would be able to make more money with it if you're not even able to make a small amount? So I fully agree with Ross here that initially what we're really trying to do is we're trying to trade to learn. And then as we can develop some consistency, then we try to tweak a few things here. We try to get better at certain elements of it. And then after we see those results being steady over time, then we begin to increase the amount of money that we're putting into a trade. And therefore we increase the amount of money we could be taking out of that trade. But I often ask people this, do you want to have more money now or later? So I'll ask you guys that question. Do you guys want to have more money now or later? Well, one good way to have less money later is to start trading with bigger amounts of money before you're truly ready. Why not have a proven successful track record before you start putting larger amounts of money into trades? Because if you're going to have expenses anyway, wouldn't you rather them be small expenses? And for most of us, stopping out is a very difficult part of trading anyway. So if you have a larger amount of money at risk, then you're likely to lose more. So people say, Robert says, I'd like to have more now and later. Well, all right, Robert, let's talk about that. How can we have more later? All right. By doing things right now that are going to put us in a position to have more later. So if I'm doing the right things, right? So I'm playing the piano, I'm learning the pieces, I'm hitting the right notes at the right time, I'm learning how to use the pedal and all that stuff, then I'll be able to do more advanced stuff later. I'll be able to play those pieces as an athlete. If I can do the basic things like dribble a basketball, now I can learn how to do it with both hands. Then I can learn how to maybe pivot, and I can learn how to go between my legs, around my back, all this kind of stuff. But the initial thing is trying to make sure I've got the basics down. All right. And if I can get the basics down and do those well, now I'm in a position to move forward. So yes, ideally, would we like to have more money now? Yes. But would we like to have more money later? Well, hopefully, because if you have less money later, your account didn't go the direction that you wanted it to, assuming you didn't take any out, right? So if your money is trying to work for you, then we need to have more money later. In an ideal setting, assuming we're not taking any out, we would have the most money we ever had in our life on our last day of life, because that would mean that our money was growing, and each day our money was working for us, and the account was growing and whatnot. Now, of course, we're going to take it out because we've got all these great things we want to do. We want to bless our family. We want to bless, our church. We want to bless some missionaries. We want to do this. We want to support, some kids through compassion. We want to do all kinds of stuff. So great. Yeah, we're going to take our money out. I'm just saying, from a theoretical perspective, if you want to have more money later, then when you're learning something new, particularly trading a newer strategy, start with a smaller amount. Because if you can show consistent results with a smaller amount, you ought to then be able to apply that concept and those strategies when you're investing more money. And when you're investing more money, but you're still doing the same things where you have a proven track record, then now you ought to see higher results. Remember, guys, as you trade more money, yes, the potential for profit increases, but so does the amount of investment, which means that your potential for expense increases as well, which is why we really strongly encourage you to say, listen, we want you to put yourself in a position to be able to reach your goals. Our goal is to help you reach your goals. So how can you reach your goals? By making sure that you're doing the right things long enough and right enough to where you're seeing this benefit that is happening over time. And then as the account is growing and as the amount of money you're putting into trades is growing, then your expenses, yes, are bigger, but they're proportional. You've already learned how to trade proportionally. So you would get to a point, where you might say, well, if I lost this amount of money, that would be devastating. It would knock out my whole account. Somebody else might say, well, that would be like a 1% of my account. Well, that's very different. All right. You're talking about losing your whole account versus 1%. It could be the same amount of money. So what we want you to do is to learn how to do this stuff. All right. But initially, right, small money. We're trading to learn. And once we've initiated the learning process, we've proven that we know what we're doing and that we're doing things the right way, then we can move into the phase where we are trading to earn. So guys, don't be afraid to small money trade, particularly, again, if you're doing a new concept or you're a new strategy. We've got all kinds of strategies and opportunities that we offer at Tradeway. We really encourage you. Anytime you're learning something new, don't be afraid to small money trade it, to evaluate the effects of what you've been doing. Have I been doing it right? To get some help. Don't be afraid to ask for help, with evaluation. And then self-evaluate. Did I do well? Did this concept work? Did I apply the knowledge correctly? Do I need to tweak anything? Or am I doing well and I'm ready to move forward? So that's it. That's our tip for today. Small money trading can be a good thing as we are trading to learn so that we can trade to earn at a later date and see our money increase over time. Thanks for being here and being a part of Tip Tuesday. We'll see you guys next week.